You may have heard on the news that inflation has hit levels not seen for the last decade. Many people ask, why is inflation so important and what is it? Simply put, inflation is the change in prices, how much they increase year to year. And inflation erodes the spending power that you have for your savings. For example, if you had $100,000 today, over the next year prices are going to rise by 5%. Your $100,000 is going to be less in a year's time. It's actually going to buy you $95,000 worth of goods. One key purpose of investing is to ensure that your wealth grows at a rate that exceeds that rate of inflation, so your purchasing power increases over time. So if you're invested in the bank deposit, and the example I've given before is what you're experiencing, the rate of inflation in New Zealand is currently 5%. If you're earning 1%, this means that your spending power has fallen by 4% and you're getting a minus 4% return. Investing to beat inflation can often be achieved by having a diversified investment portfolio. This provides a range of assets across different economic environments. For example, in an inflationary environment, having exposure to commodities is really beneficial. At Rival Wealth, we recognise that risk to investors of very low interest rates where we are now and the increased diversification within portfolios are going to offset this, including adding the exposure to commodities. This foresight has proven beneficial as rising interest rates in response to inflation have impacted returns from those fixed interest investments. Rising interest rates also have an impact on equity valuations, so share markets have risen in recent years partly due to these low interest rates. These two asset classes, equities and fixed interest, are the cornerstone of a traditional investment portfolio. If both are simultaneously impacted, this doesn't bode well for your portfolio lacking diversification in the future. In addition to equities and fixed interest investments, our discretionary investment management portfolio service includes exposure to property and infrastructure, private equity. These are stocks which are not listed on a stock market, commodities like gold and carbon credits, and they're very geographically spread. We also have some exposure to some multi-strategy hedge funds. Investing isn't simply about whether your wealth goes up. It needs to go up at a rate greater than inflation while remaining mindful of the risks being taken to achieve that goal. The world of investing is becoming more challenging with interest rates sitting at these historically low levels. Investors can no longer rely on the simple or traditional approaches to try and hope that they're going to get the returns that they have in recent years. If they do, they can not only expect lower returns but also higher risk. It has never been more important to get advice so that you can understand the short and the long-term dynamics that play out in today's financial markets and to help you navigate this investing landscape.